Okay, folks, we'll make a start. Everybody's had more than 5 minutes, so if they're late, that's just too bad. We have apologies from the Mayor, David Cole. I'll move that apology be accepted. So I can second it, please. Thank you. Those in favour? Against? Carried. Move the confirmation of the agenda. Second for that. Thank you. Councillor McTavish. In favour? Against? Carried. Draw your usual attention to the declaration of interest. And we'll move straight to the financial result for the most recent period. 31st of December. Yep.
All right, thank you everyone. So the operating result for the year is favourable, excluding Waipori of 1.335 million. After allowing for the Waipori, that favourable variance reduces down to 892,000. The variance from budget is due mainly to timing and savings in assets and operations, higher operating revenue, lower interest costs, which is positive, lower premises costs, and greater subsidies received and lower material costs. These have been partially offset by high depreciation and lower income from Waipori, which we've spoken about, and lower grants from mainly transport or NZTA. Capital expenditure is very close to budget, and I think this is probably the first time in a long time that we've been very close to budget with capital expenditure. That's positive. But very pleasing is that our debt position is just under $24 million better than budget at $234 million. So I think they're the highlights.
Very good. Questions?
I've got a couple of detailed questions. Or detailed
in the sense of being long? No. Or
probably incorrectly framed. I just wondered what the unbudgeted contribution to the Fisher and Paykel development is or was. Oh, right.
So that was contribution towards the Fisher Paykel development for Golden Block Investments?
Yeah.
Their share of that?
Yeah, thank you. Yeah, I was thinking 9A, Tyree. No. Yeah, thank you. Second question, the crematorium-related issues. Has the competitor started trading yet?
Yes. I don't know.
Yeah. So the result that we've achieved to date has been with that competitor trading?
No,
or not
for most of it.
No.
There may well be a small impact because I think they may have been operational now for maybe a month or two.
Okay.
So yeah, possibly a small impact.
Okay. And then also under 4, the 290,000 lower than expected premise cost primarily related to delayed timing of rate payments. Is that an internal issue?
Yes, it will be.
Yeah. So it should balance itself, shouldn't it?
Correct.
Yeah. Thank you. Thank you.
Councillor Noon.
Thanks, Mr. Chairman. My question relates to the Ocean Beach holding pattern project, and we heard from Richard Saunders, manager of the department, Parks Department, during the draft annual plan, talking about there was some work to be done in the balance of this financial year, and I'm just wondering, just really it's for the public to be aware, and it's probably not a question for the finance team, but what actual work has been happening during that quarter, because it's probably not obvious to most people what work we are doing. I appreciate there is more work to happen in the balance of the financial year. I just think that we need to be, we need to make it clear to the community what we're doing rather than some suggest we're not doing anything, but we're obviously doing something.
I'm not the best person to comment, and I recommend that we ask Richard to come back to the next. Sorry.
Yeah, I think it's a good point, Andrew, and it might be better if we just get Richard to send the memo around to everybody, so we've got it on paper, and send it to Chris Morris.
Any further questions? Yeah, Councillor Peake.
Thank you, Mr. Chairman. It's 4.9, a table that is about CapEx, and just that line under water and waste services, the jump in the expenditure year to date versus the budget. Maybe the writers or Grant tell us what that was for. Was it Tahuna incinerator recommission or anything of that nature?
So currently water and waste is just under $2.5 million unfavourable, so a fair bit of that has been timing. In the past they have traditionally started the financial year, put things out to tender once a new year started. They're now in the process where they actually start that before the financial year, and therefore they know they're going to have the commitment, so they've been very upfront, more than they have in previous years, and that's what you begin to see with their expenditure. They're ahead. You'll expect to see this come back slightly in the next few months.
Okay.
Grant, just in relation to that, on 419, can you just talk us through the sentence, new tenders were still being released to market and ELT approval was being sought to use new capital loan funded budget to further advance the renewals program?
So what that is looking at is whether, do you want to continue to actually invest more this year and look at it over a 2-year period, or whether you want to say, actually, hold on, no, we need to stick with this budget and then start the budget again next year, because the prices they have been getting have been quite favourable. So, and there is some advantages in doing works together. So you might do all 3 services at once as opposed to doing it slightly differently.
So to the extent that that might result in a significant variance from the current year's budget, is that likely to be over and above what you would consider to be an operational decision, or not?
That would be something, given the possible magnitude of it, that I'd be bringing back to council.
Okay, so at the moment it's simply in a let's have a look at it stage.
Yes, correct.
Right. But there may be some value to council in
Doing
bringing it forward.
Yeah.
Very good. Councillor Hawkins.
Yeah, thank you, Mr. Chairman. My question is about the CapEx table on 4.9 as well, specifically around parks and aquatic services, which are at 10.8% and 18.5% of the year-to-date budget, respectively. I'm assuming that's got something to do with this operational restructure in those departments, and things may be in something of a holding pattern. But now that that process has been completed, I guess my question is, will they be caught up by year end? And if not, what are those capital projects that are being deferred as a result of that?
Okay, so in the parks area, the major project, if you like, this year is the purchase of land out at Osgood, East Torrey, and that just hasn't happened yet. Okay, so it's not so much projects deferred, it's just a timing issue. With aquatics, I'm not sure. I know that they were looking at doing a whole new look at what their capital requirements were compared to what was originally budgeted, and whether or not some of those projects even needed to be done. I'm not aware that that's been concluded yet.
The aquatics budget's still reasonably quite small though.
Yeah.
So.
No further questions? Okay, I'll open it up for discussion. If there is anybody who wishes to move, you're moving? Seconded, thank you. Is there any discussion? Councillor Lord.
I'd just like to say that I think this is an outstanding result. I think when we think that last year we inherited $30 million of stadium debt, and now we've got $6 million, our actual position's only $6 million worse than last year. I think that should be noted, and the right people told they're doing a good job. So thank you very much for tuning in.
Very good.
I think it's significant.
Any further discussion? Councillor van der Wes.
On the claim that we inherited $30 million worth of stadium debt last year, I think
I blame you.
business mind would have to would have to grasp the nettle that it was always our debt in the first place, and it's been basically a deck chairs moving exercise. If we weren't paying the interest on the debt, then DCHL were. And if you look at the combined debt versus asset graph of the DCC, there is no joy to be had in it looking at how it has moved from 2005 up to the present day. If you look at 2005, our asset value was significantly in advance of our debt. If you look at the graph currently, our asset value is behind our debt. From a business point of view, I'll show you the graph if you like. In fact, I should send it to all of you. From a business point of view, the idea that we somehow inherited the stadium debt is laughable. We produced the stadium debt in the first place. We tried moving the deck chairs around and fobbing some of it off to DCHL. They couldn't possibly afford to pay the interest on it, so we got it back. Nothing fundamental has changed there.
Just to clarify, our total assets, the term debt component of our total equity is 7.8%. So I'm just struggling, Councillor van der Vis, as to where you derive the view that our debt is greater than our assets.
If you give me a moment, I'll dial up the DCC provided graph and show it to you.
Very good. I shall look forward to that. Is there any further discussion? Councillor Wilson.
I apologise for Mosgiltari, other councillor, raising the issue in the first place that got us to the point of this debate. But I agree. I think we've had two really good reports, or two or three good reports this afternoon, both here and in economic development. And the one question I wish I'd now asked John Christie, which I didn't ask for fear that it might lead to the very debate we're now having of sorts, is the perception or the absolute need to always run the city down for the purpose of headlines in the ODT, which is always talked about when I've been on interview panels for people from elsewhere out of Dunedin, and yet good news is not featuring when it comes around, and it is in loads and bucket loads at the moment in the city, and how we should, as leaders of the city, concentrate on giving what is a really good story and being positive about it, because it is what's going to sell the city to other people. As we heard last week, how low our, through an annual plan, how low our rates are for people. We've got a great return here for the year, and thank you to the staff for turning that round. I totally agree with Councillor Lord, the ship has turned, and yet you've been fantastic in making this all make much better sense and transparent to the readers and to the population, and it gives me great confidence that the city is in a really good position, is growing, and we shouldn't keep on running it down, because there is absolutely no reason to, and the more we do that, it is self-perpetuating to those that want the city to be down, not to succeed. We need to start as leaders talking about how good it is and acknowledging it, and getting the ODT to accept that, and writing how lucky we are as well.
Thank you. If there's no further discussion, I'll put the recommendation. Are those in favour? Aye. Against? Carried. We'll move to the financial result for 30th of November, which is the outdated one, but nevertheless there may be some specific issues that people wish to raise in terms of questions or comments. I'll take questions first. Okay. Is there any discussion? There being none, I'll put the recommendation. Those in favour? Aye. Against? Carried. The Waipori Fund result. Who wants to speak to that? Right.
I will speak to it. The fund had a good quarter. It rebounded slightly for the quarter, given a 2.9%, which was slightly higher than benchmark. The fund is currently meeting all its investment objectives, including being higher than the inflation-adjusted sum, even after allowing for the pro rata of the distribution that we make on an annual basis. So it has done reasonably well, but not as well as last year. So.
Questions?
I guess just one general question, and that relates to the benchmark that we use. are there a range of different benchmarks that you could choose, and what has led you to benchmark off this in particular? Or is it a fairly standard choice?
Look, benchmarking is always a difficult decision, and you can guarantee that you'll never get it quite right. What we have chosen is that if you look at page 1 or 6.3 in the papers, the benchmarks are down the side there, which actually lists what they are. So they're a fairly standard bunch. I guess one of the unique challenges that we do face now is because of our ethical investing policy, there's some entities now, probably more for the Australian market than the New Zealand market, that it actually makes it harder for us to achieve benchmark, because the resource sector in Australia in general is about 30% of their market. So if you have that sector doing really well, we're likely to underperform that because we don't have a lot of exposure to the two biggest players in that market, being Rio Tinto and BHP. So, but it is a benchmark. What it is trying to give you a sense of is how it's performing against industry standard. So.
Grant, can I just ask a question with regard to short-term interest and fixed interest? At the moment we're outperforming the benchmark, but I suspect that's a question of timing. And what proportion of those investments are likely to expire over the next 12 months?
I don't know if I don't know the short-term investments, which is less than a year. There's just under $6 million, 5.7 million. I don't have the number in front of me.
Okay, but do you have a sense of what we are likely to be reinvesting those for compared to that relatively? It doesn't look high, but it is compared to the sector now.
Yeah, the issue that we've got at the moment is that the market is pricing in 2 official cash or OCR rate cuts between now and the end of the year, which is going to have a long-term, it's going to have an impact on the yield that we do achieve. So that would be another 50 points. So 0.5% is likely to be drop off on average in the longer term.
So you think we would still be looking at returns on short-term interests of more than 3.5%?
Be around that. Yeah.
Okay.
Probably slightly less.
Right. And in terms of what the city is currently borrowing money at, what would be the comparison between?
So we did some P notes issued today, and they were at the bank rate note with BKBM, which was just, and I'm doing it off the top of my head, just under 3%, and it went at 3% minus 1 point, so at 2.99.
Right.
So that's what we're borrowing at.
But you still expect that we would generate a higher rate of return from lending?
You're in different markets.
Okay. Thank you.
The P note is, or the promissory note is every 90 days, so it's very, very short term.
Right. Councillor Noon.
Thanks, Mr. Chairman. Not wanting to relitigate the fossil fuel debate, Mr. Chairman.
But
however,
you're going to anyway.
Grant, you mentioned in the previous report that there was some unrealised losses with the sale of the shares in question that meet the divestment needs of the city. Will we at one stage, when you finish tidying that up, have a figure that you'll be able to share with us to indicate what the overall losses are in disposing of those? Well, at the moment there's been realised losses, but the way I read the previous report, so I assume unless that changes.
We can bring a report back on the shares that we held and exited and what the profit and loss, because some will be up and some will be down, and it will depend on the quarter, because this is the quarterly report we looked at. The report earlier was year to date, so there are swings between periods. Last financial year we did quite well by exiting some of those shares. So,
through the chair, it would be just useful to tidy that up, so at least then we all know what the outcome was,
Yes.
good, bad or indifferent.
Can I just follow up on that though? Regardless of whether or not you'd sold them, you would have shown them at a profit or a loss in the accounts anyway, so that the net difference between what they would have shown if we kept them and what they would have shown if we sold them would be zero if you were doing it properly.
Correct. One's realised versus unrealised.
Yeah. Thank you.
Sort of against my own potential interests here. Wouldn't it really be the case if we're looking at those that we can only look at sort of 10 years hence, looking back, if we'd had the same mix of those things in our portfolio during that 10 years, then we could compare what it would have been like. We can't now compare. It's not the buy-sell, it's so much as each year we would have had that mix and each year we don't have that mix now. So it's only 10 years later that we'll know. And at that stage, so many things that will have changed. But you can't compare them just by looking at the capital buy and sell, can you?
Well, there's two factors you've got to take in consideration. Is one, you can actually look at the individual shares and say, I bought at that, sold at that, therefore it's at a gain, loss, or whatever it is. The other fact that you need to consider, though, is that if I sold one share and purchased another, what was the opportunity cost or gain for it? And that's when it becomes very, very difficult to actually say, has this added value or taken away value from the portfolio? And that is a lot of work to do because it's about your portfolio design overall.
Through the chair, if you allow me, Mr. Chairman, was that my motivation was very much on the advice we had leading into that debate of the financial impact over time. So that's why I was curious to see what the actual figure is once that process has been complete. And I think we'll all remember that we had a report that accompanied the decision we made at the time, an external report that gave us certain advice, and I just wanted to see how close that figure was to the actual. No different than we do with most of our budgets.
I'm not sure if there's a question or a statement, but I was just going to say that in regard to that last issue, I think it should be water under the bridge, because once you fundamentally make a decision to divest out of something as a council, as a group, whether you personally agreed with it or disagreed with it, I think we made that decision. And the reality is, if it's up or down, that's irrelevant. That's part of having a conscience, or you made your decision not based on what it was going to financially return you, but because you fundamentally were opposed to something. And that was my position, I was opposed to it. But I sit there and I knowingly understand shares could go up or down, and it's actually a bit irrelevant.
Any further questions? All right, I'll move the recommendation. Second, please. Thank you. Discussion. Can I just? Well, I'll say one thing. Very happy to bring that report back, but I think we need to be clear that it will tell us absolutely nothing. Because if we hadn't sold them, we could have equally brought you a report back which said that the loss as a result of keeping them was exactly the same as the loss that we will show as a result of selling them. The issue is not what the price was at the day that you bought or sold them. The issue that the report raised for us was what the average return was over an extended period of time. And Councillor Calvert is correct that, in my view, that that's the only way that you would be able to evaluate the merits or otherwise of that decision. So we can certainly say that they were sold at a profit or a loss, depending on when we sold them, but that's not going to tell us anything in relation to that report, because if we'd made the decision instead to keep them, they would have shown in our accounts as to whatever their value was at this current point of time, which would have been a profit or a loss, and what would one have said then? So, if there's no other discussion, I'll put the motion. Those in favour? Aye. Against? Carried. Notification of agenda items for consideration by the Chair, which we will bring that report, but are there any other matters? Sure. Any other? Yep.
Can I just say we haven't sold all of them yet, so because we've still got that 2-year transition.
Any other matters? There being none, I'll declare the meeting closed.